Good morning, dear clients, and welcome to today's webinar from Norron. We have two portfolio managers from Norron on the line with us today. That's Oskar Almegard. He's the CIO Equities and Portfolio Manager for the Swedish equity fund Norron Active. And Johan Svantesson, he's the Portfolio Manager for Sustainable Equity Fund, which is a Nordic equity Article 9 fund. Before we start, just a few housekeeping items for today's webinar. We will kick it off with a presentation on Norron Active by Oskar for about 20 minutes, followed by a first Q&A. All participants will be in listen-only mode during the presentation. In the Q&A, you can ask questions by using the panel of the GoToWebinar software, where you find a hand sign and a sign for your microphone. Simply press on the microphone to unmute yourself, and then you can ask your question. After the first Q&A, we will have the second presentation of Norron Sustainable Equity Fund by Johan. Again, afterwards, Q&A. Both Oskar and Johan told me that they actually appreciate questions also while they are presenting. So when you want to dig deeper on the topic they are talking about, feel free to signal to us with the hand sign on the panel. Then you can unmute yourself and ask your questions right then and there. It will make for a more interactive and a more livelier presentation. We will also record this webinar and send you a link to the recording with the slides later this week. Before I hand over to Oskar, I just want to tell you why Open Funds wants to work and has been working with Norron for years. We like them because the Nordics are interesting. You can see that on the slide with the performance of the MSCI Nordics versus the MSCI Europe and the Swiss market, where the outperformance versus Europe has been 3.3% over a long time period of 20 years. Norron, on top of that, is an alpha generator. So they are then also adding another 4% in Norron Active since 2013 and have also outperformed in the Norron Sustainable Equity Fund, which was launched 3 years ago. So interesting from an asset allocation point of view to invest in the Nordics, and interesting to choose them as an active manager because they can actually add alpha. Last but not least, it's a partner-owned company. They own about 57% of Norron as a group, and they have an anchor investor that holds the rest. So Norron people that are working for you have skin in the game, and that is something we like in the managers we work with. With this, over to you, Oskar.
All right, good morning. Thanks everybody for joining. We'll start here with the presentation. Right, so everybody can see the presentation now, I hope. So what is Norron Active? It's an actively managed Swedish long-only equities. We have generated, as you see, approximately 80 percentage points after fees. That should be noted since the inception. We have a benchmark, a Swedish benchmark, which is a broad benchmark of 120 names, and we have outperformed some 1.3% yearly from that since the inceptions. And where has the excessive returns come from? 50% of the returns are driven from mainly the medium-sized companies. That's what we call case. I will go through that a little bit more in detail later on. And 50% are driven by large companies. And this is this portfolio is a balanced. So it's the outperformance of the large cap companies come from both value and growth. It's quite concentrated. As I said, it's towards our benchmark of 120 names. We hold around over time 30 names. It can vary between 25 to 33, 34, and 80% of the capital is invested in large and mid cap. I mentioned it's a balanced portfolio between value and growth, and I think that's the interesting part, because you won't be in just one bracket, and especially these last 4, 5, 6 years, it has become an even a bigger theme that you between these value and growth factors, and we believe that you can capture outperformance in both of these over time. We do quite a hefty sustainability reporting as well, and we'll be willing to share that more in depth if you have any questions or thinking about that. Why do we believe that the balanced portfolio is interesting? Here we can see this is the MSCI Nordic value versus the growth index in the Nordics. And what we can see, this is from 2001. What we can see is that you tend to see a lot of mean reversion in these types. You have a couple of 2, 3, 4 years where one factor is more appreciated than the other. We saw that especially from the COVID crisis until upon end of 2021, where when we now has seen the rates rising quite heavily. So this is why we think I think over time it is what we believe is the best thing to have this balanced portfolio, because it's you have to be very good in asset allocation to be able to time these factors. One example is when we saw towards the second half of 2018, where interest rates rised in the US. And by the end of 2018, the central banks took a 180-degree turn and became, from being quite hawkish, became dovish. And then we saw the outperformance of the growth stocks again. So I think that's timing is it's difficult in this. If you have 100% to go from 100% growth to 100% value. So what our thinking is for this portfolio, and it's been like that since the inception, is that we have we form our portfolio in this way. In the low bracket or the bracket on lowest down, we have somewhere between 10 and 14, around that, value names. This is I must say more than or closely to 100% large cap companies. You have a few examples, but of course banks has almost always been quite a big value name or value sector, of course. Moving up a little bit more in the ladder is we see growth stocks, but these are bigger in size positions than the value names. Here it's more of a mix between mid and large cap companies. This is what we believe, that there are some few names that you probably recognize, these global names as Atlas Copco and Hexagon, which has been outperforming the capital goods sector for a long time. Just an example, looking at the different capital good names in the sector, Atlas Copco has been growing around 6-7%, and Hexagon even more, and that's combined with structural changes and structural growth. But also these type of names have an M&A agenda and has been having that for a long time. M&A is of course a very hot topic now when the interest rates are at these levels, but these companies has been able to do very creative acquisitions, even in a harsher rate environment, so to speak, rather than just the last couple of from the mid 10s to up to 2021. So and on top we have some what we call case that has been a good alpha generator, but that the size positioning and the part of the portfolio varies quite a bit during the times. At this moment, we are in the low side of just around 5% in case for the moment. We think we can find some good value in the growth bracket with the smaller risk at this moment. I think this top part is more sensitive, of course, for the rate environment as well, and the risk taking of the market. But these type of positions will never exceed 3%. The medium is around 2%. It's actually little. We're talking about 1.5% around there at top, we would say it's very hard for us for it to actually reach all the way up to 3%. If that happens, that company has probably moved into the growth basket and become a mid-cap name instead of a small to smaller mid-cap. So the selection process, there's a twofold in this one, because we have these type of two factors within it. If we are looking on the value side, if we're looking at that we're searching for value names, we are more looking at the stable company with long history and predictable business model, of course. I think stable dividend is, of course, a solid balance sheet is another one that we can see the predictable to do a predictable cash flow analysis on it. Also, we see the investment selection is more based on a profit neutral multiple, so to speak. The EV sales multiple is in this bracket much more interesting than the other. I think that because I will show you a little bit more on that going forward on an example, but I think EV sales has been the best multiple for us to look at when to add a position in the value side. On the growth companies, we see they were looking at the quality companies. Especially at this time, we definitely want to see a long history in this and companies that's been able to grow in a higher rate environment as well. We're now looking at a lot of how the companies has performed before the great financial crisis. If they were able to grow even in that type of rate environment, that type of names is interesting for us. It should also be we are very much looking into secular trends. So to be for example, the Atlas Copco on the semiconductor side, which we see is a secular trend growth, and also the measuring side in Hexagon, for example. And lastly, on the case side, this is companies with high potential. Of course, there's a great risk. There's a higher risk reward side, and that hence the positioning side on in the portfolio as well. But we need to see good management, of course, in all of our companies. But this is even more that, because it's driven mainly of how the companies run inside more than the global economic side of it. On the investment universe around 120 to 150, we are actually able to we can look outside the Swedish market as well, and that what we have been doing that. For example, we've been holding Nordics for a year and a half, exited that position 2 days ago, actually, completely. So now we're not owners of that anymore, but that has been a very, very good alpha generator for us. But we have a few parts in this selection, and that's what you can see here. It's this on the subjective side, we have this, how is the strategy? Of course, management is super important in this one. And ownership, I think especially during this time, we've seen both ups and downs in the private equity main owner side. That's something we don't like that much. We think that we need to have more stable ownership in that. You can also always, especially now, you can question some of the maybe a little bit too elevated earnings, that the short-term earnings that private equity has captured for their investors. And you have to always ask yourself, why are they selling at this point? So strong ownership, flesh and blood, more of that, I would say. On the fundamental analysis, of course, we have the financial reporting, and we see how the estimates are moving. Now at this time, it's interesting to see that the estimates is still quite stable. The stocks are not as stable. The market is telling us that the estimates will come down quite heavily, especially in the mid and small cap segment. But valuation over time, and as I mentioned, valuation is it's a little bit depending on what type of valuation you want to look at in this in which type of factor bracket you are looking at. And then you have the ESG. We have the portfolio is ranking when we do our analysis. It's looking very sustainable, our investment in the different sites. And so how do we own the positions then? We after the selection process, we do regular company meetings, of course, analyst meetings. Here we tend to not searching for confirmation biased analysis meeting. What I mean by that is that if we have a holding, we want to meet the analyst that has a different view than what we have in the portfolio, because otherwise you just preaching to the choir. Of course, estimate changes. If what we are thinking, where do we think the market is on estimates, and where is the estimates moving? Sustainability follow-up. We have done a few things. We're actually a couple of years ago we were owner in the Swedish steel company, which took a U-turn on their sustainability focusing, and we were a holder of that one, and we actually exited that because we thought the sustainability focus got on the wrong side. And this is not just what we saw in this type of name, for example, sustainability. Johan will go through that a little bit more with his presentation, but this is what we think. This is the sustainability side should be a driver for the share price and for the earnings, not for companies for greenwashing. And if you change your focus, what we believe that sustainability can drive earnings, and if you change that, we will question that company and that investment. But also, of course, especially during these couple of years, the macro environment, of course, this is more of the where to put our money, the overweights in the different sectors and factors. So that's of course a bigger one. But we will always have both the growth and the value in this names. And when do we exit? First, if the valuation is reaching the target we have set in-house. We are always evaluating the investment against the universe. Since this is a relative fund, if in absolute terms we haven't reached the target, but in relative terms it has outperformed quite heavily, we could exit that as well. And on the more dull side, if the investment case has changed, i.e. some, for example, the sustainability side, if that has changed, if the company is moving in another direction than what they said, that comes into the strategy and management. So I think they intertwine some bit, these ones.
Oscar, sorry to interrupt.
Yep.
This is Ronnie speaking.
Hi, Ronnie.
It looks like some elements of market timing flow into your management process, selection process. Can you just explain a little more about what the typical investment horizon is, and also what the turnover is on your portfolio, please?
Yeah, I would say the horizon, it's I would say it varies actually a little bit between the value and the growth side, because we would say that the value side is a shorter period of holdings actually, because that's not the long-term trend growth. It's more of a value where we see that the market is over exaggerating both on the upside and the downside. So that's a little bit shorter, somewhere from, I would say, from 6 months to a year in general. On the growth side, that could be a year, that could be 5 years. That could actually, we have a few holdings that's been in the portfolio more or less in weight, but the company's been in the portfolio since the inception. So I think but typically this fund, the time horizon is a year and a little bit over that, but it varies within the portfolio and within the typical factors.
What about the core?
Sorry?
What about the core holdings that you have?
Oh, the core holdings. That could be if the company is moving in the direction we want. That could be we don't have a set end date, so to speak. But we also, of course, if the valuation has reached a target without any news, that would be out. But I think if it goes to the projections, what we are thinking, we could be holder for that. If the core is moving in the direction we want, that will move into the growth basket. And as I said, that could be for a very, very long time. So there's no end date on that one, but typically in the core side, 3 to 4 years. That's probably what you need to see for these type of companies. And on the turnover, it is around 1.5 times. It was a little bit more before. But now we are. It could be up to 1.8, 1 or 2% before, but now it's around 1.5. So that's the thinking. And as I said, the bigger part of the turnover is in the value names.
Thank you.
So, any more questions? No, all right. Just interrupt if you have anything. This is how the portfolio is exposed at the moment. We have a little overweight, if you would say that, or a little bit more tilt towards the value names, and we will probably have that type of thinking until we see real evidence from the central banks that they are becoming a little bit more dovish. Not because as you know, the long-term rate is fluctuating quite heavily. We've seen that just since this summer, and I think that's more of the market rather than the central banks, because you have different delegates saying different things depending on what type of persons they are. If you're a dovish or a hawkish delegate in the central on the central bank side, but I think that what we are liking in this one, and I'm going to come back to you on that one as well. But this you will just on pure dividend yield at these moments, you in the value names, you get quite a good return from it. So the next step will probably, our thinking is that we will probably not increase that much in value going forward. This is probably around where we will top out. But as I said, we need to see some real evidence, and that goes from the case. Case is now just 5%, and there we definitely need more evidence. And I think if you're looking at it, there will be, when we see a little bit more calmer market, the market tends to go to the mid-cap names before the real small-cap names, where our case is predominantly at the moment. So the thinking is that we will move from the 53 and the 42. That's the one that you should look at. That's the next step where it will vary. That we will take maybe a little more bullish, so to speak, on the growth side than it is at current time. So this is just a historical return since inception. The Norron Active is the dark gray line. We think that this market is, of course, the Swedish market is a little bit more beta than the European index, but it also shows in the long-term performance of the fund. We will continue to hopefully do the outperformance from our benchmark, and continue to do it towards the Nordic and the European index. Just to wrap it up, probably, but here's some just.
Oscar,
yeah.
Sorry to interrupt again. Just a word on performance. This year seems to be a more challenging environment. And so I was wondering whether you could perhaps discuss performance attribution across the different buckets that you manage, value, growth, and case. Especially in a rising interest environment, you would have thought that value would have benefited, but it doesn't necessarily seem to be the case. So maybe you could just explain a little more what the drivers in your performance were this year.
I would say that first of all, we had if you say it's a little bit more challenging, we as a firm took a decision in 2016-17 to invest in private equity, so to speak, unlisted holdings. That was a good decision at that time, but it wasn't as good when the market froze in these type of names. What our regulator have been doing this year is that they wrote down all our unlisted holdings by 95%. This part of portfolio is now 1% of the total NAV. And we have taken actually since 2 years back a firm-wide decision that a UCITS fund, daily traded UCITS funds, should not invest in unlisted equities, because this, as we've been seeing, it's a risk that we get, so to speak, trapped in some holdings and won't be able to liquidate that in an orderly manner. So the write-downs was not decided by us, but by our regulator. That's the drawdown towards our benchmark index. Looking at if on a day-to-day basis we are in line with the market, and that we should know that's after fees. So I must say that the hit has been taken with 95% in the portfolio of the PE already. So that's been if you could say it, boxed in the performance. On the value and the growth side, yeah, we've been struggling a little bit on the growth names, and this is actually the large cap names. The Hexagon, for example, is down almost around 15-20%. This is purely multiple contraction. The company is reporting in a few days now, so we will see how the current trading is looking. But it's just been the multiple contraction. It's now trading at the same multiple as it did 15 years ago, even though the margin is up 20 percentage points over this time. So I think that's the short term has been rough on that one and the multiple, but we believe that over time this is the market is way too harsh on it. The case side has been quite small, so it's mainly of the mid cap and large cap growth names that has been hurting us. In the value basket, we were quite negative to the Nordic banks starting of this year, but we took what we are doing. As we said, we are constantly evaluating the holdings and the non-holdings towards our benchmark. And we took a U-turn in May and actually bought banks and from quite a big underweight to quite a big overweight, which has in both absolute and relative relative has been a good performer. So it's mainly the growth mid and large cap names that has been hurting the performance in this.
Thank you.
And just to illustrate a little bit what we're thinking now, the Nordic banks, why are we still overweight in this one, even though that we had a good relative performer? We think it's too cheap to ignore, actually. As you see in the circle lines, the market is telling us that the estimate should move down some 25% to come to a average. We think that and looking at the price book and the return on equity, this normally follows each other quite well. It hasn't now. Our thinking is that that's actually why we were underweight from the beginning of the year, was that the banks are exposed to the Swedish real estate market, which has been super hot for 5, 6, 7 years, which is not now. But what's important to know that the banks are not sitting on unsecured part of it. That's the bond side or the listed the fixed income side. These are sitting on the secured side, and we think that the market is way too negative on credit losses going forward. We have seen a couple of banks reporting. We have just only one bank left reporting in the Swedish name. They're all showing insignificant, I must say, insignificant credit losses still. So we think that the estimates is actually, or the market is actually taking this way too negative on the banks. And you can also, what we see on the yield side, as we said, this is a cash yield paid with the total cash yield paid for the Nordic banks from 23 to 25. You will have around an average around 8% cash yield, and then you should add up some buybacks that some majority part of the banks are actually doing right now. So you have 8% cash yield, which is corresponding to almost the return that you get over time in the benchmark, and with the low valuation of this one, what we are saying, you don't have to take just a multiple bet that the multiple will rise. Even though if we see the multiple trading at these levels, you will most definitely get a very good cash yield and buybacks on it. On the other side, the Swedish cap sector, we have been quite a little bit negative to it in the last 6 months. We're actually now turning turning to look at it at a more attractive side. And I mentioned before the EV sales multiple. It's looking quite elevated from a long-term perspective still, and that's why I think you need to be more selective on this part. Estimates are still moving up. This is most of the estimates moving up is FX and the price increases that we've seen. So the underlying volume is not there and hasn't been there. It's actually it's more reflected as the PMIs are right now. If we see the PMIs turning to quite a little bit better, this could actually drive volume going forward. But these are two names that we see on the EV sales multiple, both EV sales multiples you see on the top left corner. These are now below what we are thinking. ASA is a holding, SKF is not, but we are definitely looking into that more. We need to see the report, the Q3 report before we take a position on it. But this is how we view the capital goods sector. It looks super cheap on the EV/EBIT multiples, but you have to bear in mind on the EV sales, as I mentioned before. That's the most important. Where is the market actually pricing in the long-term margins? Both of these and all of the Swedish cap goods sectors has actually moved up their margins over this period of time. So you could argue that the base should be a little bit more higher than it was starting from before. But I have to stop there, so I leave some room for further Q&A and then over to Johan.
Any more questions on active from the audience? If that's not the case, then yeah, Johan, on sustainable equity.
Thank you. So let's go to sustainable equity. This slide is basically showing why we did start the fund from the beginning and why we think this is an interesting investment. I mean, if you look at the headline, the current landscape, we can see that in the past years, the transition has been growing rapidly. We can see that solar power and wind is growing fast in Europe. In addition to that, we can see that global EV sales is growing even higher, and that in turn has affected the global battery demand positively. So that's what we have seen in the past, but when we're looking at the future, we see that both the US and the European governments are spending a lot of money to increase the transition and to do this fast. And the Sustainable Equity Fund is investing in the Nordics, but as we see it, the Nordic companies are very global in their reach. Both products and services are global distributed. So we think that the Nordic companies will benefit from this transition, both when the Europe and the US is doing the transition. This is also affecting the S in ESG. I mean, as you can see here in the bottom, each year 65 million people are added to the world's urban population, and we also see that the changing demographics is affecting the transition. So we can find both interesting investments in the E, but also in the S and the G in ESG. So looking at the Sustainable Equity Fund, it's a Nordic focused fund. We do invest in small cap, mid cap and large cap names in the Nordics. Over time, we think this will be about 1/3 in each bracket. Today, we have a little bit less in the small cap space. The fund is focusing on enabling companies, enabling companies of a company helping other companies to actually do the transition. So that could be a company that are helping a real estate company to be more sustainable. that could be if they are installing, energy efficient lamps or something like that. We think that the excess return will be able to come from, will drive from strong underlying drivers, but also that we have a long investment horizon and that we are focusing on the enabling companies. As said, we have a long investment horizon. We are focusing and helping the company to actually do the transition, and we think that we can benefit from owning the company in this long-term sustainable transition as we see. The fund is an Article 9 fund, meaning that we have sustainable objectives as our objective, and the fund is relatively diversified. We have about 45 companies in the fund today. Looking at the selection process, when we are trying to find a new company, we are looking at both the sustainability specific side and the company specific side. So when looking at sustainability, each investment should contribute to one of our sustainable objectives, as you can see in the top right corner on this slide. We want that every company should actively contribute to one of the UN SDGs. And when looking at the company specific side, we want companies that are driven by interesting themes or secular trends and should benefit from regulatory tailwinds. This is more of a growth focused fund compared to active. So we are looking for quality companies that we think will grow their profits in a higher way than what we see is now discounted by the market. Our investment universe is about 150 to 200 companies that we think are Article 9 in the Nordics. Just as active, we do the subjective assessment, the fundamental analysis, and of course the ESG assessment. In the ESG assessment, we dig deep in the good governance practices. We're looking at doing a significant harm criteria and of course do a ESG risk analysis. So before every investment, we do an ESG analysis of every holding. And we're looking at how we own the position. This is pretty much the same as Norron Active. We are not focusing on the macro side as much. However, we are looking at trends and how the sustainable environment are developing globally. Looking at the exit side, we tend to own our companies for a pretty long time. But of course, if they are reaching our valuation target, we will exit the position. Otherwise, we will exit the position if we see any changes in the investment case. So just the last slide. This is the development or the performance since the inception. We have benefited from having a rather diversified portfolio. So we are not investing just in green companies. We are focusing on our 4 sustainable objectives. And if you're like comparing this to the S&P Global Clean Energy Index, we have seen that when interest rate is rising, it has been a very tough time for these kinds of companies. So this was a brief summary of the Norron Sustainable Equity, and if you have any questions, you're welcome to ask them.
I would have a question. Maybe you were mentioning the enablers that are main focus of your portfolio. Can you maybe just give 1 or 2 names in terms of the thought process, the analysis that you did, and why that stock ended up in your portfolio?
So for example, we have a company in Sweden called AdTech. They are delivering products to bigger companies in order to do the transition. So it could be something like a water pump or batteries or anything like that these larger companies need in order to be more energy efficient. As we think this company has about more than 50% to these growing trends and to these secular trends. So that's one of our companies in the enabling space that we think are very interesting.
I have a question. Can you give us an idea of how valuations in the Nordics compares to European companies?
I think, but I don't know if you have any view on this, Oscar, but I think that the valuation may be somewhat higher since we have seen more growth in the Nordic names. The Nordic names has been very good in coming with new ideas and doing the industrial process. So I think the growth in these names has been somewhat higher, and by that the multiples has been somewhat higher. But I can't say here right now what the PE in the Nordics compared to the European is at the moment. But in general and historical, the PE has been somewhat higher due to the growth we have seen in the Nordics.
Any more questions from the audience? If that's not the case, then I would like to take the time to thank Oscar and Johan for their presentations. As mentioned at the beginning, we will send out a recording of this webinar. We also put it on the Open Funds website, and we will send you the slides that Dave have used to present the two funds. Norron is always easy to access, so for anybody wanting a follow-up, a Zoom more focused on maybe one of the two funds and more details, just get in touch with us at Open Funds and we can always organize that for you. Thanks for your time and for participating today, and have a nice day.
Thank you.
Thank you.
Thank you very much. Have a nice day.
Bye.
Bye.